Is it possible that Dave Ramsey is wrong? I would much rather have Tiger Woods' golf swing than Tiger Woods' golf clubs. Hey, what's up, everybody? My name is Jay Helms. I am the founder of this podcast and movement known as the W2 Capitalist. Today, I'm joined by Mark Willis. Mark is a guy who, Mark, I should have mentioned this to you earlier, but I'm going to pick on you about your haircut because you and I share the same barber, right? But Mark is a man on a mission to help you think differently about your money, your economy, and your future. After graduating with 6 figures of student loan debt and discovering a way to turn his debt into real wealth as he watched everybody lose their retirement savings and home equity in 2008, he knew that he needed to find a more predictable way to meet his financial objectives for himself and those of his clients. So Mark is a certified financial planner, a 2-time #1 best-selling author, and host, or should I say co-host, of the Not Your Average Financial podcast. On his podcast, he shares some of his strategies for investing in real estate, paying for college without going broke. Man, paying for college without going broke. That's an interesting topic. And creating an income in retirement you won't outlive. Mark works with people who want to grow their wealth in ways that are safe and predictable to become their own source of financing and create a tax-free income in retirement. Before I welcome Mark in the show, I want to encourage everybody that this is, while some of those topics may sound advanced, this is going to be a real estate investing 101 discussion, right? Is how can you set it? If this is, I'm going to use, Mark and I were chatting about this right before I hit the record button, and he used a phrase, I loved it, is it's day one, month one of your real estate investing journey. What do you need to do now to set yourself up to be able to build this wealth? So Mark, welcome to the show.
Thanks, Jay. Thanks for having me on. I appreciate it.
Absolutely. That co-host on the podcast just came out. He was like, he almost said, "Thanks for being on my shows."
It's the same Zoom platform. I just which side of the fence are we on? Yeah, but I'm so glad to be on your show. You guys are doing such a great job, and I think it's the mindset of the employee is just a mindset, right?
Yeah.
So what you're showing folks, and I think your episodes are just awesome because you're saying, hey, you can have the employee paycheck and provide that responsible gift to your family or to yourself, but you can earn, invest, and repeat outside of that day job. Your extra work, your side hustle becomes your full-time thing.
Yep.
With the work that you invite people to explore. You don't have to just be a card puncher, a time puncher. You can reclaim your life financially when you are a W2 capitalist. So keep up the great work, man.
Thank you. I appreciate that. I appreciate that endorsement for sure. I did not pay him to say that, but I've got to figure out how to do that for sure. That was great. So want to talk about a couple of things. I'm sitting here looking at your one sheet. There's 4 topics here that we can dive into. And we talked about a few of them before I hit the record button, but I want to talk about creative real estate funding solutions, right? And keep in mind, and I ask you to help me keep you on course, because a lot of times what I do on the podcast is I talk to people who I want to talk to, quite frankly, because of where I'm at in my investing career. And I think today's episode, though, we want to talk to the folks who are just starting, right? And so help keep me honest and say, Jay, if you have to, say, Jay, that's more an advanced topic. You and I can talk offline or whatnot. But let's talk about getting creative for real estate funding solutions, because if I'm just now starting out, and this is a problem I had, 2014 when we really started actively investing, is I didn't have capital, right? I didn't think I had capital until I discovered a home equity line of credit that I had. And I basically bought our first property with that home equity line of credit. But I want to talk about other ways to get creative to fund real estate investing for the one-on-one person. So what are some of the ideas that we can do as a brand newbie, right, to investing to get creative with that?
Well, yeah, I think the topic holds true no matter if it is day one, month one, or you're 20 years in. We all need cash. Cash is the oxygen that lets our business operate. In fact, I've said before that when you're an employee, your money is your boss. But when you're the boss, your money is your employee.
Love
And
that.
so this is going to be for anybody: wholesalers, flippers, rehabbers, landlords, lien holders, hard money lenders, syndicators, commercial real estate developers, residential, and people just dabbling, or people, as you mentioned, just getting started. But it always starts with cash. And so how will we use this thing called cash to our advantage rather than other people using us for their advantage? And so I'd say anybody who wants to grow wealth safely and know how important it is to have easy access to capital, and anybody who remembers the lessons from the last real estate crash, I think this episode will be for you, whether it's day one or day, 1001.
Yeah.
But we're going to be talking directly to people who are just getting started, and what you can do to prepare for and eventually take control of your financial future.
So let's go there for a minute. Let's just say I'm an average guy, right? I'm making somewhere around 50 to 75,000 a year, and I want to get into real estate investing because I see what that has done for other people that have been able to do it. But my mindset, and got a baby crying in the background. Hopefully, it's
You want
not
to take
picking up too bad.
you want to take a break? I'm good. I'm good.
No, I'm good. If you can't hear
Yeah,
it, I'm
sounds
good.
great. Yeah.
Um, but how does somebody in that position, right? They're making 50 to 75,000, and they want to get in because they've read all the studies. They see this, that more millionaires and more wealth has been built through real estate than any other investment vehicle. But they have that mindset of, well, I work 8 to 5. I only make 50 to 75,000 a year. I can't get started.
Yeah. Yeah. And you're right. This is not just an isolated issue. We all are a part of a giant system that's been going on for generations now. Back in 1940, the average American, according to the U.S. Commerce Bureau, saved a third of their income, almost a third. It was a
Wow.
30%, 30%, and they were servicing debt at 11%. So 11
Mm,
cents on the dollar was going to debt. Now, fast forward to today, we've upside down flipped that pyramid, right? Now we're saving about 5% of our income as of this year, and we're spending or servicing the debt to the tune of 36 cents on the dollar. So that means we're not paying down the debt, we're just servicing that debt at 36 cents on the dollar. So that's more than a third of our income just servicing debt. And Jay, this is with low interest rates, right?
yeah.
If
Yeah.
low interest rates go high, that's going to become even more burdensome. But just stop and think about that. We all know that, as an employee, time is money. You might be paid hourly or on a salary, but your time punching that clock is where the income comes from, right? We're trading time for money. Well, even if we move to being the W-2 capitalist that I want you guys all to be, if you're spending or if you're servicing a debt to the tune of 36 cents on the dollar, if you've got your home mortgage, your real estate properties, your student loans, your car loans, your credit cards, if all that, total it all up, if a third of your income, like the average American, is going to debt, that means a third of your day is spent
Mm,
slave to a bank.
mm.
What does that do to your get up and go ness in the morning? I don't really get motivated to serve a bank. And Jay, there was a great book that was published a year or two ago called Debt: The First 5,000 Years by
Wow.
David Graeber. 5,000. So banking is a function that's been around for as long as we've had, cavemen, basically.
Yeah.
And it's a great, fantastic title. The book's a little long, but I love the concept. The truth of the matter is we're already in the banking business. We're already funneling our cash, that very important oxygen, through somebody else's ventilator.
Mm,
Okay. And then they'll hand it back to us if we're nice enough. Right. So given all that, what could we do to create the biggest change in our financial life with the least amount of effort? There's a great question that was posed by Gary Keller. The question is, what's the one thing you can do today such that by doing it, everything else becomes easier or unnecessary?
yeah.
I'd like to tweak that question just a bit for today's episode. What's the one thing your money could do for you such that by doing it, everything else in your real estate portfolio and everything else in your other financial goals and objectives becomes easier or unnecessary? If
Love
I
that.
can find a small little hinge that swings the big door in my life, everything else becomes easier. So,
Love that.
that's sort of the context we're all living in. We have debt up to our eyeballs. So we have to go out and scratch together what savings we can save. We go throw it into riskier and riskier assets. We put more money into our 401ks or more money into riskier investment strategies. And we're trying to keep up with a lifestyle that our grandparents never had to do. They didn't have
Yeah.
smartphones. They didn't have, a car payment that went for 6 years. So we're all trying to keep up with a lifestyle that's really gone crazy. I really call it an insane way to handle our money. And part of the strategy that we offer and work on and specialize in at our firm offers to bring people back to a pathway of financial sanity that looks and sounds a lot like peace of mind, where you can invest where you want, but still make sure that your financial goals and objectives are met without taking a bunch of unnecessary risk.
Yeah. And you said something there about the bank will loan you money. You're talking about how much they will, they're really in control. And
Yeah.
I still remember the feeling, and this was 20 something years ago. It feels weird to say that, but I wanted a new car. I didn't have to be new. I just wanted a newer vehicle. And because I was in college, I drove this truck. My dad still has it today. And, it smoked a little bit. It, wasn't the most appealing thing, but it was a ride. And my parents provided it to me. Um, but I didn't want it. Right. I wanted something else. I was trying to attract the girls. I thought the car was going to be the way to do it. And I went to a bank and I said, hey, because I went to this bank that my grandmother opened the account for me when I was 5 years old. Right.
Wow. Yeah.
And that's the only bank I've ever done business with. And I had put in, eventually amassed what I thought was a big number. Of course, I was in college eating ramen noodles, and there was $5,000 in there. And I thought, okay, I can use this plus whatever the bank's going to give me, whatever. And then I went to the bank and asked them, I said, how much can you guys loan me? And they're like, well, we can loan you $5,000. I was like, but I have $5,000 in the bank.
Yeah.
They're like, well, we
Mm-hmm.
can loan you what you have in the bank to match it. I was like, well, that's not how I want to do this,
Yeah.
So
It's
needless to
their game.
say,
Yeah.
yeah. And back then I was like, well, all right. So I left that bank.
Yeah.
I thought I was something big.
Mm-hmm.
But it's funny, the thing I remember, I mean, it was a bank in Jacksonville, Alabama. I remember it was, I don't even think the branch is there now, or it's definitely under a different name, but I remember that feeling being so disheartened. I thought, man, I'm walking in here. I've got my life together. I'm in college, got some money in the bank, got to get a new car. And yeah, just didn't happen. So
Yeah.
anyway, I didn't get a new vehicle until after I left, way after I left college.
Right.
But yeah, you're right. There is an insane way. We are in a society where it's the way we handle money is pretty insane. Right. And I've got to be careful here because I'm going to get advanced. I want to keep this to a one-on-one level. But what is the first step? Say I've never really been taught how to manage money. I don't think that what I'm doing is insane because everybody else is doing it. But then when I look at my bank account, I get really frustrated because I am living paycheck to paycheck. What is the first thing that I need to do to realize, okay, what I'm doing is really insane and there is a better way to do it, right?
Right. Right. Well, I don't claim to know everybody's situation, but I can say this. Stop for a moment, even just 5 minutes. If you're going to spend this whole long, beautiful life using this thing called money, and when do we ever not need money
Yeah.
in our lifetime, right? So maybe it's worth 5 minutes of your time to think about how do we solve for the biggest problems or opportunities in our life? Our kids' college, our debt that we need to pay off, our real estate desires that we have, our objectives for income in the future, our business, protecting your wealth for future generations. So asking yourself, where do I want my money to live is a great question to start with. And that don't look at labels or names. Like don't end with real estate or annuities or savings account or hedge funds or dynastic trusts. Don't go there yet. Go back a little bit. Go to first principles and ask yourself, what sort of characteristics, what sort of attributes would I want my money to have if I could just paint with my own brush? If I could wave a magic wand, if I could be Pope of money for the day, what sort of characteristics would I want to have if I could create my brand new unicorn, a brand new financial vehicle that just had everything I wanted, just start that little wish list, take
Yeah.
5 minutes and think that through. Because, and again, don't start with labels. I always tell folks I would much rather to have Tiger Woods golf swing than Tiger Woods golf clubs.
Mm,
It
yeah.
doesn't matter if I got the right clubs. If I've got the swing, I can do really pretty well with any club I can grab a hold of. And the same is true with money. If you have your money doing the right function, then you can really use just about any real estate strategy or whatever else you decide to make wealth happen. So some that actually kind of takes me down a bit of memory lane. I'll quickly mention my wife and I, we graduated from college in 2008, Jay, with undergrad and graduate degree, and then we had about six figures at that time in student loan debt. And for us, that was
Wow.
a massive amount of cash, 120 grand or so, and it was like $900 a month. For us, that was a big deal because we had no job
Yeah.
and no awareness of what money was. I did not get a degree in finance.
And the frustrating
Um,
thing is you can
yeah,
get a loan for that
right.
and still
Yeah,
not
yeah,
have
yeah.
a job.
No,
Either way,
no. Yeah,
it's a,
it's
I,
true.
yeah.
Here's
Anyway.
my piece. Here's my piece of paper. Now put me into debt, six figures.
Yeah.
For a
Yeah.
degree and no job. Yeah. So great way to start life for sure.
Yeah.
So we jokingly say I married two women in college. One was my wife, and one was Sally Mae. So she hung around for way too long. But
Yeah.
we started doing the Dave Ramsey thing. We were throwing money at the debt and doing the snowball method and all that. And it was about halfway through that project that we started asking that question: what do I want my money doing for me? Because we'd throw 3 grand, 2 grand, 4 grand at that debt problem every month. We were blowing it up. We were living cheap. We were working side gigs.
Yeah.
You'd have been proud of us as the W-2 capitalists, right? But we never really stopped to say, what is our money doing? When we give money to Sally and her cronies, all we get in exchange is a nice thank you note. Thank you for your
Hmm.
payment. Thank you for your payment. And I was a slave to Sally and her cronies. So we started creating a little checklist with the help of people we trusted and cared, who cared for us. We started thinking, all right, if we could design the perfect financial instrument to help us with our debt payoff, to buy back our debt, not just pay it off, to actually build real wealth as we pay off our debt. If we could use this same financial vehicle to meet all of our other objectives, what would it look like? How could we create this thing? And so we started making a list. And here was our list, but Jay, I'd love to know if you'd add anything to this. We wanted easy access to the money. We didn't want to be penalized or taxed or whatever if we had an emergency or if we needed to use the cash for real estate or whatever. We wanted it to be nice and safe, where it would be, a third party would be regularly auditing, where my money was to check that out. I wanted it to be like growing at a competitive rate. I wanted it to be safe and predictable, so I always know that it was there. Like, the old saying, not just a return on your money, but a return of your money is pretty important.
Yeah.
I wanted some tax advantages, like tax-free access to the cash, not getting taxed on it every year, having it tax-free in the future. I wanted it to have no contribution limits. I didn't want to be pinned in by something like the government telling me I can't add more than 6 grand to my Roth IRA.
Right. Yep.
For example, yep. So you're tracking there. I wanted it also to be nice and flexible, where I could like lower that amount if I got into a tight bind. And I wanted it to be able to be private, where I wouldn't get sued or it wouldn't show up in public courts. I didn't want to have to be like have constantly watching my back if somebody slipped on a banana peel in front of one of my rental properties,
Yeah.
decided they wanted to sue me or something like that. So those were sort of my checklists. I'm curious, Jay, anything there stand out to you, or would you add anything?
But a lot of it's hard for me to add to that list. I mean, it's a pretty inclusive list. The things that I love, I love about I love every one of them, really. The flexibility of it, the asset protection is probably something I'm focused on right now,
Mm-hmm.
and this is not for necessarily newbies, but as we've starting to build some sort of traction in our record, we have to be thinking about that. We have to be thinking about, and we're doing all the right stuff. We have, some LLCs, we have some umbrella insurance policies, but I've seen and read stories where, even in today's time, some not lawyers, some judges, even they're recognizing these LLCs as quote unquote, because I don't think mine is, but quote unquote, as a shell for that level of protection, and they're breaking that seal. right? And
Yeah.
so this is because of where we are in our journey. This is something that asset protection is something that's really been high on my list of something more that I need to do, and then there's the whole umbrella insurance policy that we have on all of our properties, including our personal one, right? Just in
Mm-hmm.
case
Mm-hmm.
that if you don't have an umbrella insurance policy, if you're listening to this or watching this, by the way, if you're watching this, you almost saw me spill I was drinking Coke when you said be the Pope for a day and paint with your money paintbrush. I
Yeah.
almost spewed Coke. Which, by the way, if anybody, this is a running joke now. I need to do this more often, but if anybody works at Coke and they want to come on and sponsor the show, let me know, right?
Now we're
J at
talking. Yeah.
w2capitalist.com. Let me know. But yeah, the where we're at, we definitely need to start looking at this, which is why I was intrigued to talk to you about some of this stuff. But no, the again, going back to who I hope is listening to this is a very real estate investing 101, right? Is how do I get started, right? You guys eventually created this. Um, Here's my ideal scenario where I want my money to be, right? But what did you do next? Like, what was the next step
Mhm.
you took as a young married couple out of college, severely in debt?
Mhm.
And I imagine this would also work for people who didn't go to college, right? And don't have that
Yeah.
same debt structure. But what would be the next step after you figure out where what you want your money to look like?
Yeah. I didn't want somebody to tell me, "Hey, here's your 401k. Just set
Oh
it, forget
man.
it, and don't think about it." I wanted to actually ask the questions. What do I want? Because I
Mm,
think most most happiness comes from pursuing that desire.
yep.
If it's a positive desire and a good, healthy thing for you, you know. So that to me was our little wish list. And so when I looked at that list, I didn't know much about money. And again, I didn't get a degree in finance, but I did get passionate about money and got so focused on it. I started working for a CPA. I watched in the middle of the 2008, 9, and 10 meltdown her making calls to clients saying, "I'm sorry, Mr. Client, but I just lost you half your life savings." So that was a wake up call.
Wow.
And I
That's a
said,
tough conversation to make and on
yeah,
either end.
yeah, yeah, yeah. So I dove deep. I said, do I really want to do this financial advisor thing? And I ended up finding some strategies as I was going through my CFP
Mm,
training, and some mentors came to us around the same time to sort of introduce us to some strategies that made a full checklist of everything I was looking for. I mean, as you go through the CFP, you actually are forced to chew and digest over 450 financial products, and you're supposed to know all this stuff for the exams and the ongoing education. It's an immense mountain of work to do. It
yeah.
took us, my wife and I should say, 3 years to get through it.
Wow.
Um, but at the end of the day, there was this one financial vehicle that I just could not get past, and it was almost I almost did just walk right by it because of my bias, but I tried to keep my labels off of it, right? So, what is it? I was able to find a financial vehicle that works better than almost anything else for all of my needs that I needed, the list that I gave you there, as well as real estate investing. And it's a massively maximized, modernized form of dividend paying whole life insurance, of all
Yeah.
things. Now, I was taken aback by that because, again, as a
Dave
Ramsey
Ramsey.
fanboy,
Yeah.
yeah, yeah, yeah. I was totally like, arms were crossed, and I was very much actually the gentleman friend and former professor who introduced the idea to me. Um, I almost shook it off, tried to find out if he was in some sort of scam or something. So I dug into it, but in
Nothing
just
like
sort of a
those professors and
yeah,
mentors trying to scam you into
that's
building
right.
wealth.
I
I
dug
love it.
into it trying to help this guy out of it.
Yeah.
So what I found in quick summary is whole life insurance has been around almost 200 years,
Mm,
and as long as this country's been around, actually, it's guaranteed to grow and has increased in value every single year since its inception. It has better returns than other, you know, cash equivalents or bond funds. It's never going to wow me with 30% return, but it's always going to have a predictable increase every single year. What I loved about it was it's a liquid, accessible bucket of money. It's not tying that money up. It's not locking that money up. Of course, it is life insurance, so we're able to see this thing grow and
mm.
then leave to my family in the future. And then
Yeah.
finally, it allows us to become our own source of financing, to be our own banker as we go.
Yeah. And you mentioned something there that I am skeptical a little bit.
Hmm.
So one of the I've heard about whole life insurance policies for a while now. I actually admitted to you before we started recording that I signed up for one, and I cashed it out in 2000. Now I signed up for it. I didn't tell you this. I signed up for it back in 2001. Right, because a
Okay.
buddy of mine
Yeah.
had just signed up for being a whole life insurance policy, and I was trying to help him out.
Hmm.
And I mean, $50 a month. Now I'm
Yep.
still fresh out of college. I'm still, eating
Yeah.
ramen noodles kind of thing. And but yeah, I was donating to 50, and then I found Dave Ramsey, and Ramsey's like, get rid of the whole life
Gone.
insurance
Get
policy.
rid of
So
it.
I
Yeah.
cashed it out,
Yep.
and I now uh,
Yeah. Yeah. Yeah.
which it did good. I mean, it was not one that, again, you got to hold these things for a while, but I was not putting very much into it every month,
Yeah.
but it's one of those things where now I'm in that position now. And I believe my friend trying to talk me out of it goes, man, you're going to regret this. And I'm like, yeah, no, I probably need to call in and tell him, hey, yeah, I
Yeah.
regret it. But,
Well,
um,
not all whole life is created equal. So, and I would
yeah.
say, just as a side note, pro tip, walk into a bank with a life insurance policy and see how much more they'll loan you if you
Mm,
really want, because you can use your cash. Go back and watch It's a Wonderful Life. That's exactly what the
yeah.
the the main character does, right?
Yeah.
I didn't understand that when I first watched the movie years ago. I was like, how do you lend against a life insurance policy? It's like, I got my health insurance. Here you go. What,
Yeah.
or my automobile insurance policy. It didn't make sense. And a lot of people, myself included, only understood term insurance, which is
Mm,
not the same thing. And even old-fashioned whole life, the stuff that Dave Ramsey hates on, I agree with Dave, because that's old-fashioned, very high commission, low cash value. What we're talking about here is not your father's life insurance.
mm,
It's been modernized for massive cash value. You're cutting the commissions down tremendously. It's a mutual life insurance company that's, in essence, you are an owner of that company. The gains are going to be locked in. Every year you get a dividend check, which are not guaranteed. The dividends aren't. But every year you get one. It's packed right into your guaranteed cash value and helps accelerate how much growth you get in the future. So you get cash value in the first month, in the first day of the policy, and it begins to build like a financial management tool right from the start.
yeah.
But what I found really interesting about this, Jay, is when I use the policy as a source of capital for my debt payoff or my real estate investing, the policy will continue to grow as if I had not touched a dime of the money.
And see, that's the thing. So I was just looking this up. I had Anthony Ornella on, and he does a lot. And he even, I think, what triggered me to look that up is you said all whole life insurance policies are not created equal. And I think that's something he said too. But I had him on the podcast May of last year, and it's he started explaining this stuff to me just like you are, and I'm like, I am so skeptical. I'm like, how does
Yeah,
money appear out of thin air? Right.
yeah, yeah,
And
yeah,
I'm to this point where now, and we're talking about some of the stuff I'm doing now off air. And I was like, you know what? I know this is the next step I need to take because I am so apprehensive to it. Right.
mm-hmm.
It's not that I haven't done my research. I mean, like I said, I had him on a year ago. I used to have a whole life insurance policy. I've been studying, I've been looking at it, I've been reading books, and I'm like, I just need to do it, right? But I'm so
Yeah, yeah,
apprehensive even at this point because it seems too good to be true, right?
yeah.
And
Let's
that's
talk about that,
okay.
because that's exactly where I was too.
Yeah,
So one, not all insurance policies will do what I just said. And there are 10,000 whole life agents in the country. Not all of them are CFPs, and not all
yeah,
of them are what's referred to as bank on yourself professionals. So you want to work with a bank on yourself professional. What is that? Think of it like this. If you've ever been to the grocery store and you get a all natural granola bar versus a organic granola bar, USDA sealed, right? Granola
yeah,
bar. Which of those two are you certain followed a certain set of steps and guidelines and procedures? The organic one, right? So do you want someone who's read a book or two and calls himself an expert? And there are a lot of really good people who've read a book or two and good, honest, full of integrity, but they may or may not know everything that we're talking about on this show. So I would highly recommend working with a bank on yourself professional. It's the only credential and training strategy that professionals, financial professionals go through in the country that's been, trademarked and protected to kind of give the general public the assurance that you're getting what you're reading about or listening onto this
Yeah.
podcast about, rather than just someone else with a, watching a couple YouTube videos and then building a policy for you.
Yeah.
Not saying anything bad about that, just that's been my experience. I've seen policies grow way too slow, or they're losing some of the tax advantages, or both.
Gotcha.
But to get to your point, yeah, I was very skeptical too, until I remembered this is how every one of us who is a homeowner has our house working for us, right?
Mm.
Let's say your house is worth, I don't know, let's just say it's worth 400 grand. Zillow calls it 400 grand. Let's say your mortgage is 300 grand. Okay, so 400 grand value of house, 300 grand debt. How much is your house growing on? Is it only growing on 100 grand? Or is it growing on the entire amount, even the amount you borrowed against, right? You've simply used the house as collateral for your mortgage. Same is true with HELOCs too. The house is simply used as collateral for your mortgage debt. And the same is true with the policy. We're not removing money out of that policy. We're simply using it as collateral from the insurance company that offered you that loan. Now, here's what's cool. Unlike a house, the policy grows guaranteed. Houses don't,
Yeah.
as we learned in 2008. Also, we control the environment. Back to simple day one. If you control the environment where your money lives, you're going to win every time. If you let a bank control the environment where your money lives, you're going to lose every time. You're going to walk into that bank. Hey, I got $5,000 sitting in your savings account. Okay, great.
We can loan you 5,000.
Yeah, exactly. Yeah, how
That's
generous
nuts.
of them.
Wow. Why don't I just cash my
Yeah.
savings out?
And by the way, did they really have your 5,000 sitting there at the bank?
No,
No.
not. It was not
No.
tangible. No, not
It
at
was
all.
loaned out to the guy behind you,
Yeah.
coming in with that loan payment. So talk about money out of thin air.
Yeah.
The banks are really the ones that are pulling the fast one on us.
Yeah. Yeah.
The insurance companies are not allowed to inflate the money supply like that. So I've been truly astounded at the simplicity and the attainability of these policies. You can start these policies day one, month one of your financial journey. I've got folks that are putting a couple $100 a month in. I've got folks, just called the guy today, he's putting another $500,000 this year into his
Wow.
policies. So you can be anywhere on that spectrum. It's really your call and where you are right now. We do a financial consultation with folks one-on-one, to see if this is even a good fit for you. But you could use the policy as a source of money, a line of credit to yourself, borrow against it. It continues to grow even on the capital you borrow. You can use that money to fix up your kitchen. You can invest in real estate. You could pay off your student loans. That was what we did.
Yeah.
And the policy continues to build and grow wealth. It's uninterrupted compound growth. One of the coolest and most rare places in the universe to find it.
Yeah. And this is not the first time I've heard this. I wouldn't call it a pitch, but explanation of what this policy can do. And I'm still sitting here like, man, I just, how does money create that way? And here's the conclusion I'm coming to. And I hope everybody who's listening to this gets there a lot faster than I did, is that I was trained. I went to school, grade school, postgraduate, whatnot. And I was trained to think a certain way. I was taught and trained to think a certain way. And now the hang up is really my mental capacity, because it's uncomfortable for me. And that's why I realized, when I come to that realization, I'm like, okay, then I know now this is the way that I need to move. Right. So I appreciate that
respect that
explanation.
greatly.
Yeah.
No, I respect your journey there. It was a moment when someone told me, it was the gentleman, the mentor, that kind of showed this, and he had no skin in the game. He's just a good
Right.
friend.
He wasn't running a scam.
Yeah, no. He's just a professor and a friend and a mentor. He came up and visited us in Chicago just to see us and say hello, and he shared this idea with us. But what he said to me was, Mark, He looked me right in the eye and he said, Mark, is it possible that Dave Ramsey could be wrong about something? And the scales fell from my eyes. It was sort of like, I hadn't even considered that Dave didn't write the fifth gospel. So, I had to, I had to sort of pull aside there. Yeah.
I pick on Dave a lot in the podcast and in the communities and stuff. Yeah. But it's funny. I had, Ken, oh man, the guy, that's horrible. What's that?
Ken McElroy or somebody?
No, not Ken McElroy.
One of his other guys? Okay.
One of his other guys on that talks about, working your career, having your lifelong career, or working a job that you love, basically. And it's
Ken Coleman.
Ken Coleman. Thank you for looking that up for me.
Thank you, Google.
Yeah, I had Ken Coleman on. We talked a little bit. Of course, very early on, he said, look, I'm not talking about Dave. He goes, no, I don't expect you to. We're here to talk about how you can succeed at your W-2 so that you can invest and have a better life, right? And
Awesome.
But yeah, I think Dave's principles are good. It's he has these baby steps as you get on your financial journey. I think that is somewhere in his baby steps, or somewhere in should be in everybody's baby steps, right? Because it gives you a more extreme, what was the phrase? I heard a phrase last week is Dave Ramsey. Oh man, I wish I could remember this exactly. And who told me, but it was basically like Dave Ramsey is the guy that's going to get the train back on the track. But once the train's back on the track, you got to go do something else, right?
I don't want my entire life to be walking baby steps. I got a marathon.
No. Yeah,
I got a marathon.
But
that. let me kind of I'll agree with everything you just said, Jay. 100%. You're right. Dave's changed my life. He helped me get focused on my money. So thank you, Dave, if you're listening. As if you're listening.
Thank you, Dave, if you're listening.
Me too. I'm sure he listens, right? I'm sure he listens to your show.
I'm sure.
But one thing I will say, is there something better than the debt snowball method? That's what he's famous for.
Yeah.
What do you have at the end of your debt snowball? You got a bunch of thank you notes, and you got a big that goose egg of net worth. And you did that baby step and you worked for years, and you're finally at the starting line of your life, except you're not. Because the gun went off 4 years ago when you were just getting your life started, and it took you 4 years to get debt free, or whatever your numbers are.
Yeah.
What if you could build real wealth and pay off your debt at the same time? Here's what I mean. We call it, and we trademarked it, we call it the debt snowbank method. All right. Just to kind of poke a little fun there. What if you could be your own
I see what
banker?
you did there.
Right. Yeah. So here's how you do it. 4 simple steps, real simple. Pay your minimums on all your debts. That's what we did to pay off our student loans. You pay your minimums on all your debts. At the same time, you throw all your extra that you possibly can into a bank on yourself designed whole life policy, designed the right way. You plow money into those policies over time. That policy is going to grow. Your debt's going to come down slowly, and your policy is going to grow fast. So that's step 2, pack money into a policy. Step 3, borrow against the policy and pay off the debt, one at a time or all at once, whatever you're liking there. The policy will continue to build and earn wealth for your future, even as you've taken the loan to wipe out the debt. So now you didn't just pay off the debt, you bought it back. You became your own banker. You bought back that debt. You're better than debt free. I don't care about being debt free. Let's get on a radio show and scream, I'm better than debt free. And then step 4, you pay the loan back to yourself on your own schedule. You're the banker. So you could skip a payment, pay a couple extra. If you never pay the loan off to the policy, it's just deducted from your death benefit when you pass away. So that's the better than debt-free strategy. We call it the debt snowbank method. We've done a bunch of podcast episodes on it, a couple of YouTubes that show some numbers there. But for us and my wife and I, we'll have a couple extra $100,000 in our future because we paid the debt off this simple way. No extra money involved. It was just how we paid the debt off.
Gotcha.
That made all the difference.
Love it. You said something there that, you're talking about the scales came off when you were talking about Ramsey or, Ramsey. You didn't say Ramsey disciple, but I'm going to say Ramsey disciple.
Fanboy. Yeah.
Fanboy. That's what it was. You said something there that a light bulb went off for me when it comes to this. And I don't think this is what you meant, but the reason that you can loan off of that, or you can take that out and it still grows, is because they're taking the underwriter for that policy is taking some risk saying that he's going to be around for a little bit longer. Right. So light bulb just went off for me. So
Oh
I've got
yeah,
to figure out what to
yeah.
do next with that light bulb. But here's what I want to ask you. So, because we're coming up on time, I want to make sure that, number one, do people know when they hire a certified financial planner, right, such as yourself, who has a focus on, what was the phrase you used? A bank,
Oh, a
bank on
bank on
yourself
yourself.
professional, right? Does it cost, right? How does that engagement start?
Yeah.
And number two, if they want to go down the whole life insurance policy, I'm assuming there's a physical that's involved, right? That you've got to do some sort of make sure that I'm not on my last leg sort of thing before you guys underwrite it. So there's
Right.
probably some of that happens, but, and this is why I want to bring that up now. 20 years ago, when I did my first, again, we may be talking about a different policy. I was a lot healthier than I am now, right? And it's just something that happens with age. So the earlier is your advice, the earlier you start, the better, right?
Yeah, yeah, you bring up some great points there. I don't recommend everyone just rush out and get one of these, especially not from just any old guy or gal who has an insurance license. But
Even
also,
if it's your friend, even if it's your
yeah, even
best
if it's your
friend and
friend,
they
yeah,
rode in that crappy truck that you had
yeah.
with it, they carpooled you in that crappy truck you
Mm-hmm.
had to college,
Mm-hmm.
even if it was that person, don't
That's right,
just go out and do
exactly.
that.
That sounds oddly specific, Jay. I love it.
I'm not
Um,
sure where that's going from, but yeah.
um, so, you don't have to be the insured to be the owner of these policies. So if you've had a couple of health issues or too many candles on the birthday cake, you can still own a policy or policies on family members or business
Mm,
partners and still be the controller and owner of the money. Also, I would say, yeah, it does not cost anything to chat with us. We don't
okay.
charge a fee. We're able to, but I choose not to. I don't think it's right or fair for you to pay me money until I've actually added value to your life. And here's a question that I've been sort of thinking about, toying with lately. Jay, if you had the ability to pay a financial advisor with somebody else's money, all right, and because of your actions, you became financially independent, guaranteed, would you do that?
Yeah, of course.
Yeah. I mean, how many people are spending on your 401k at work,
Oh man.
fees, investment advice, assets under management fee? What is assets under management? It's your assets under their management.
Yeah.
That's what assets. So, and you're paying them to give them your money. How about that, right? With insurance, we don't charge a fee for you to have a consultation with us. We do a one-on-one advisory phone call, just to kind of get to know each other, Zoom call, whatever. And then if it looks like it'll be a good fit, if this strategy or another strategy is a good fit for you, I or one of my advisors would crunch the numbers, black and white. Here's exactly what it costs. The payment to our business would come from the insurance company, not from your pocket.
Mm,
We don't charge you. We don't send you a bill. We don't send you an invoice. The commissions would come directly from the insurance company, and all that would be disclosed to you before you sign up. And the guarantees of the cash value would be just as prevalent as well. So
yeah.
that kind of, for me, I've noticed on average we get paid about 1/10 as much as what the investment advisor would down the street.
Mm.
I was sort of joking with someone. Remember that movie Wolf of Wall Street?
Oh yeah.
Came out a
Yeah.
few years ago. I didn't notice a wolf of insurance anywhere in that movie. They're not making a ton of money here, you know.
And they're
uh,
also not doing highly illegal
right,
stuff.
exactly. Yeah, yeah.
At least we
So,
hope, right? No,
yeah,
it's
exactly. Yeah. So,
Mark Willis, the wolf
yeah.
of insurance. No,
Don't make
that's a
that
good.
the title of this episode, all right?
I'm not. I'm not.
But no, it's
Uh,
a it's a affordable and I think fair. There's an insurance cost to these policies. They're not going to be positive growth in the first year. You're covering an insurance expense,
right.
but going into this as a long game strategy, you're going to find power in uninterrupted compound growth and liquid cash for your real estate or for your kids' college or anything else you might want to use the money for.
So how do I, because I'm about to go do this, how do I go and schedule something with you? And is that the same as the best way to connect with you?
Yeah, head over to growmorewealth.com, growmorewealth.com. fill out the form there and just say hello, and we'll happily connect you with me or one of my advisors and colleagues that I work with.
Okay.
That's growmorewealth.com. If you want to date us first, go to notyouraveragefinancialpodcast.com.
Perfect. And when I get to growyourwealth.com, then I just click on request
Yep.
your free analysis. Is that
Yep.
the link? Okay.
It's growmorewealth.com, and then just click.
Grow More Wealth.
Yeah.
Whose side am I on? It has your, oh, I did say Grow More Wealth.
Oh, yeah.
I
Right on.
typed in
Good.
Grow More Wealth and then said the wrong
Cool.
thing. Sorry.
Cool.
All right.
All
I'm doing
good.
this now. I'm going to talk to you or one of your people there because, like I said, this is something I've been entertaining for a while, and I know it's something I need to do. And we're getting to the point where we should have done it years ago. So if you're listening or watching, this is my plea to you is don't wait 5 years down the road. You know, right now, and I want to get your opinion on this as well, Mark, before we leave, but right now there is some craziness going on with the economy, with COVID, with, you know, the market. When I say market, the real estate market, I don't do a whole lot with stocks, so I'm staying away from that. But there's some craziness going on. And if there's anything in a video I released last week on the YouTube channel was, you know, now is not the time to invest. Now is the time to really sharpen your axe and learn how and what, right? How and what you can do. So I think this is why this is big on my radar right now, is because I need something to do to fill that time spot. Because if I don't, I'm going to go out and find a deal that I'm going to incorrectly justify in my head. So this is the time for me to get this in place. So I'm going to
Rock and
go
roll.
schedule some time with you and see what the next step is. So.
Yeah, you're right, man. Two quotes, I guess, quickly. The life is like a roll of toilet paper. The more you use it, the faster it goes. So act now while you can. And then
that's going to be the title of the episode right there.
Yeah, right on. Yeah, we're keeping it classy here. And then sharpen that axe. Take if you're going to have 6 hours to chop down a tree, 5 of those hours, just sharpen that axe. You know, make it as sharp as you can.
Yeah.
So someone way smarter than me said that. So yeah, go get it. Enjoy it, guys. Thank you very much, Jay, for the opportunity to be on your show.
I've learned a lot. I'm glad that we focused on the listener being a real estate 101 or wealth builder 101, because when it comes to this stuff, that's where I still am. Right. So it was good.
Hey, we all can learn. You know, if you ever feel like you've arrived, we've headed down the wrong path, you know. So always continue learning.
Yep. So thank you, Mark. Again, Mark Willis with growmorewealth.com. You can also listen to his podcast at nyafinancialpodcast.com. Mark, thank you very much, sir. We will talk again soon.
Thanks, Jay.
All right, guys, we just hung up with Mark Willis. I'm doing it. I've got his calendar up here. I'm going to pull up some time. He gave me a special link. Sorry, guys, but he gave me a special link right to his calendar. I don't know. I guess it's something you get from being the podcast host. But I'm going to schedule some time with him, and I'm diving in. I'm tired of pussyfooting around, right, and not doing this. So I'm jumping in. I want to encourage you to do this, right, because it is one of those things where I kind of kick on myself because I got out of the whole life insurance thing 7 or 8 years ago. But like he mentioned, and I'm using this as my caveat to say it's okay, not all policies are created. But as he and I were talking, I first started investing in that thing in 2001. Oh man, it's crazy to think that was 20 freaking years ago, almost 20 years ago, and what I would be able to do with that now. So I'm starting today, just like any planting a tree. The best time to plant a tree, right? First time was 20 years ago. Second time was today. So today I'm doing that. I'm planting that tree, going to set my family up for some wealth building. And no matter where you're at financially, get some time on Mark's calendar or with his teammates, right? Again, you're not a podcast host, or maybe you are. I don't know. Just messing with you. Get some time on his calendar. He is the first guy that has ever come across as, hey, I'm a certified financial planner and certified in personal banking, right? Bank on yourself. So check that out. Check him out. Also, since you've watched this all the way through on YouTube, I want to give you something. I want to offer you a 15% promo code off of all of our W2 Capitalist swag, our hats. I've got some t-shirts over here somewhere. And so go to w2capitalist.com/shop. SHOP, or the button I think says store. That's why I always get confused. I don't know why we didn't do both of them at the same time, or both of them with the same lingo, but go to w2capitalist.com/shop or click on the store button and use the promo code YouTube when you check out. You're going to get 15% off. You get the hats, t-shirts, anything. There's some water bottles left over there, I think. So anything that we have left in the store, you're going to get with that promo code. So that's it. I will see you guys next week.